CRM. I have the daily chart, and then I have the calls, and I have the put side and the options. This is CRM that's going to report earnings tomorrow, and we're trading the 155 calls that we got really cheap, okay, for that event. Now, we're going to buy the 150 puts to hedge the calls. So we're going to be buying 30 contracts over here on the 155 calls, and on the 150 puts, we'll buy 15 of these. That way we're very well hedged. Now let's go over the daily chart. And we're experts at trading earnings. Look on the channel there on the ones that we did. CrowdStrike was a big one we had puts on. But nonetheless, Salesforce missed the last quarter and they struggled. And the lows were down here on 1013 when we put it in. It was 136. And that was cheap. And was it ever? Now, the reason why they had challenges was because of their previous guidance. But we do know that if they beat and give upside guidance, that 100-day moving average is at 162. And the 150-day moving average at 165. And the best one is that 200-day moving average right there. Now, when it comes to protecting money, not how much money you make, but how you protect it. Now, in the live trading room, you're going to be able to get in on every trade that we do. You get that free 5-day trial. You get to watch us doing them live, and you get to see everything. You can believe what you see. Then we develop the relationship for many years to come. I've been doing this for 35 years. So it's always good to understand what the risk is with markets and how important it is to protect capital and the stops. A lot of people lose money. You know, you bought and call options, they've gone up, but you can lose money. And the only reason why is because you're not protecting the other end of the trade. And if we're fast traders, we do all different time frames, but these earnings play is a 1-day pop. Okay, so if Salesforce comes in good, then we got a chance of making a lot of money. If they miss and drop all the way back down to the 52-week lows there at 137, we make a lot of money. Yes, we're going to lose money on one side, but we're going to get a big chunk of it back. We're not going to get all of it back because more weighted to the upside than the downside. Okay, so basically we have the 150 calls, 155 calls, and then we have the 150s on the other end, which is $3 below the market. And this is where the last little uptrend happened at 144 right here. So if it dropped down, I'm going to get paid on the puts. I will cash them in. It will bounce back up, and then I would sell out of the calls and get more money back that way. Sign up. Enjoy it. We'll have a lot of fun.